Imagine for a moment that your life savings are sitting in a trap that is about to close. You have worked for decades to build your nest egg and provide for your family. You have followed all the conventional advice and played by the rules. But the rules of the financial game have changed without your permission or your knowledge. The money you see on your digital screen might not be there when you need it most. History has a strange way of repeating itself, but with a much darker twist this time. In the year 1929, the world witnessed a collapse that defined a generation. Back then, your great-grandfather could walk into a bank and demand his physical cash. He held a leather book with handwritten entries that proved his ownership. If the bank was failing, he could at least try to grab his bills and run. The system was slow and physical, and it allowed for a fighting chance. Fast forward to the world of 2026, and the situation is fundamentally different. The exit doors that saved people in the past have been systematically welded shut. We are living in a digital mirage where liquidity can vanish with a single line of code. In this discussion, we will examine why the coming years could make 1929 look like a practice round. We will look at the hidden mechanisms designed to keep you from accessing your own wealth. More importantly, we will look at how the smart money is moving right now to avoid the trap. Let us start by looking at the hard truth about how most people are prepared for retirement. According to recent data from the Federal Reserve, the median household savings is surprisingly low. Most families approaching retirement have only about $200,000 set aside. This is a far cry from the million-dollar dream that social media likes to promote. Even worse, a huge portion of that wealth is tied up in home equity. You can own a house worth $500,000, but you cannot pay for surgery with a brick. You cannot buy groceries with the drywall in your guest bedroom. Home equity is a beautiful number on a piece of paper until the market freezes. When everyone tries to sell their home at the same time, the value evaporates instantly. This creates a massive gap between what people think they have and what they can actually spend. The reality is that most Americans are one market crash away from total dependency. They rely on a system that is increasingly fragile and heavily regulated against them. Think about your retirement accounts like the 401k. These accounts were sold to the public as a brilliant tax advantage. But what they actually created was a $7 trillion liquidity trap. The government and the banks know exactly where that money is, and they know you cannot touch it. If you try to withdraw your funds before the age of 59.5, you face massive penalties. You lose 35% or more of your life work to taxes and fines instantly. In a moment of national panic, those withdrawal systems can be frozen for administrative review. We saw this happen in 2008 and again in March of 2020. Large investment firms have the legal right to suspend withdrawals during unusual market conditions. This means your safety net is only available when the sun is shining. The moment the storm hits, the gate is locked and the key is held by someone else. Let us look at a story of two different people to understand how this plays out. Consider a young professional named Tyler who thought he was a financial genius. He turned $30,000 into $150,000 during a tech boom. He checked his investment apps every hour and felt completely secure. But Tyler did not understand the plumbing of the modern market. When the market turned volatile in early 2024, he tried to sell his positions. His crypto exchange went down for maintenance during the most critical 4-hour window. His brokerage account halted trading 6 times in 2 days due to high volatility. By the time the system allowed him to act, his wealth had dropped by more than half. Tyler learned the hard way that digital numbers are not the same as realized wealth. Now consider another person named Maria, who is a school teacher in Miami. Maria watched her co-workers chase the latest trends while she stayed disciplined. She kept 40% of her savings in physical cash and hard assets. People laughed at her and said she was losing money to inflation every single year. But when a major regional bank collapsed recently, Maria was the only one who slept well. She did not need to refresh a banking app to see if her money was still there. She had the means to pay her mortgage and buy gas while everyone else was stuck. Maria understands that in a crisis, the person who controls the physical asset wins. This is the perspective of the smart money and the institutional insiders. If you look at what chief executive officers are doing right now, the signs are clear. Corporate insiders have been selling their own company stocks at record levels. They are moving billions of dollars out of the equity markets and into defensive positions. These are the people who see the internal data before the public ever hears a word. When the captains of the ship are loading the lifeboats, you should pay attention. Sovereign wealth funds from countries like Norway and Saudi Arabia are also shifting. They are moving away from speculative stocks and into gold and short-term bonds. They are preparing for a period of extreme volatility and a lack of liquidity. They are not waiting for a news anchor to tell them that the crash has started. One of the most reliable signals in history is the inverted yield curve. This signal has predicted every single recession for the past 70 years. We are currently seeing the longest inversion in financial history. This means the bond market is screaming that a major correction is inevitable. The corporate bond market is also facing a massive wall of debt. Trillions of dollars in loans must be refinanced before the end of 2027. These companies borrowed money when interest rates were near 0%. Now they must refinance at rates that are 3 or 4 times higher. Many of these firms are already struggling to pay their interest with current profits. When these zombie companies start to fail, it will trigger a chain reaction. The banking system is also under new pressure from regulations like Basel III. These rules are designed to make banks more stable by requiring higher capital reserves. However, there is a hidden consequence for the average depositor like you. Under these regulations, banks are encouraged to restrict your access to funds during stress events. Your deposits can be treated as regulatory capital to keep the bank afloat. This is not a conspiracy theory, but a documented part of international banking standards. The government has also implemented daily limits on how much cash you can take out. If you try to withdraw more than $10,000, you are flagged for a report. Even a $500 daily limit at an automated teller machine is a barrier. If you have $50,000 in the bank, it would take you 100 days to get it out. In a fast-moving crisis, 100 days is far too long to wait. The exits have been narrowed so that only a few can get through at a time. This prevents a massive bank run, but it also keeps your money trapped inside. So what can you actually do today to protect what you have worked for? The first step is to diversify your access rather than just your assets. It does not matter if you own stocks and bonds, if they are all in the same digital system. You need to have some funds in a local credit union that is not tied to the big banks. You should have a supply of physical cash stored in a secure and fireproof location. This cash is your insurance policy against a system failure or a power outage. The second step is to read the fine print of your account agreements. Look for clauses that mention extraordinary circumstances or force majeure. Understand exactly how and when your financial provider can limit your withdrawals. Knowledge of the trap is the only way to avoid stepping into it. The third step is to focus on hard assets that you can physically control. This includes physical gold or silver coins, rather than paper exchange-traded funds. It also includes developing practical skills that are valuable regardless of the economy. The person who can fix things or grow food will always have a form of currency. The fourth step is to watch the actions of the insiders and the elite. Stop listening to what the talking heads on television are telling you to do. Look at where the billions of dollars are actually flowing in the real world. The smart money is moving towards safety and tangibility right now. Finally, you must have a written plan for a systemic crisis. Ask yourself how you will pay for your basic needs if your cards do not work for a month. Do you have enough resources outside of the banking system to survive a freeze? Having a plan before the panic starts is the difference between response and disaster. The people who survived 1929 were those who saw the signs and acted. They did not wait for permission, and they did not trust the crowd. We are living in a similar moment where speculation has reached absurd levels. The signs of a massive correction are flashing red in every major sector. The savings at risk are yours, and the responsibility to protect them is yours alone. The system is not designed to protect your wealth during a collapse. It is designed to maintain its own stability at your expense. Acknowledge the risk today so that you can be prepared for tomorrow. The choice is between being a prepared observer or being the exit liquidity. Take control of your financial future before the gate is closed for good. Stay vigilant and stay informed, because your life work depends on it. Your ancestors learned this lesson through pain and hardship. You have the opportunity to learn it through observation and action. Decide now which path you will take when the next crisis arrives. The clock is ticking, and the patterns of history are clear for all to see. Do not be the one staring at an error message when the world changes. Be the one who was ready before the first domino fell. Success in the coming years will not be measured by how much you made. It will be measured by how much you kept and how much you could actually use. Prepare yourself now and secure your legacy for the generations to follow. The truth is often uncomfortable, but it is the only thing that will keep you safe. Thank you for listening to these hard truths today. I hope you take this knowledge and turn it into a shield for your family. Your future self will thank you for the decisions you make this very hour. Stay safe and stay prepared.